So we apply same techniques that we print money on one side, but we create a backing on the other side so that it will be balanced. There will be no inflation. It will grow. And it will grow because we invest money and reinvest money, and I'll explain how. And this smart contract will give one token to the funder, one token to the investor on every dollar invested, and 0.05 to initiator. And this initiator could be Crunchbase, it could be entity in Korea that tracks all the investment events, it could be entity in Russia that tracks all the investment events, in Israel, etc. We kind of get data from everywhere about all the investment events, and we give tokens. Okay, this is one part of the ecosystem. This token is backed by a fund. So what we do initial token sell, and the smart contract allocates 300 billion venture tokens to venture network fund. And these tokens, as I said, initially they're not worth anything unless we believe that they're worth something. So how we do it? We decide, okay, we will do 5 months token sell, and we will say that the value of the token will be 1 cent, worth 1 cent in October once we finish the token sell, and now we pre-sell it with a discount. So if you buy these tokens in May, you get 80% discount on 1 cent. If you buy tokens in June, July, you get 50% discount, so you pay half a cent for a token. And then we will do public sale for everyone except of US residents that are not accredited investor. And the idea is that we essentially define that we have a 3 billion fund initially, and we sell it with a discount, and it becomes smaller. But we are converting venture tokens to other assets that already have a value, which is BTC, Ethereum, and dollars. And part of the fund will be in that assets, and the rest of the fund will be in venture tokens. And venture tokens will get value over time. Same like Bitcoin got value, same like Ethereum got value. It's all belief and supply and demand. So over the next 10 years, what we are going to do is that the venture network assets will be worth the 3 trillion tokens awarded, essentially given for free, will be worth over $300 billion, including our assets of the fund, including the team tokens, including the third-party listed assets. And I'll explain what does it mean. In the next 20 years, this airdrop will generate so many tokens to the market that the token sell tokens will be only 4.6%. But our way of reinvesting money will balance all this, and I'll explain how. So we will use the fund that we have, and we will invest it in token sell. 90% of the funds that we'll invest every year will go to token sales, and we will hold them for 12 months. And then we will decide which tokens we get liquidity, and 10% will go for equity investments, and we're typically going to hold it for 5 years because we'll not get liquidity earlier. And what we do, every investment that we will make, 80% of that investment we will list on our marketplace. And if you have venture tokens, you will be able to buy that asset from us. So essentially we circulate our investment as a retail buyer to venture token holders. It's like crowd selling versus crowdfunding. So we are a big fund. We invest in deals where we write big check. Because of big check, we get very good discount or preferential rights that we pass to our ecosystem. And our ecosystem are founders and investors that did the investment in the past, or you bought our tokens during the token sale, or you can buy them on exchange. And if we have amazing deals on the marketplace, you will hear from those that have venture token and have access to our closed environment that there is a great deal. So it will create a lot of demand for venture token because it's not going to be enough of these to get access to great deals. So this is kind of the approach, how we're going to create utility for venture token on our marketplace. It's going to be online platform closed only for venture token holders, those that have wallet for venture token, and you'll be able to use only venture token to get access to these deals. So by creating this marketplace, a fund and airdrop, everyone wins. The founder gets liquidity and diversification because if, let's say you got 1 million investment, as a reward you got also 1 million divided by 100, this is how much reward you got in venture token, and then you can use that value of venture tokens on the marketplace to buy assets of other companies that we lease them. The only thing I forgot to mention is that when we lease these assets, it's an auction. So it might be that we got Telegram tokens in first round for 37 cents. This is the price we lease them on our marketplace, 80% of our allocation. And others can buy them 37 cents, some may bid 40 cents, 50 cents, and they will buy that, that asset from us. They will return venture token to us, and these venture tokens will get value now, right? Because they bought asset that's worth something using venture tokens. Now we can use venture tokens to invest in others. So this way we circulate, and essentially we create a fund that's worth 3 billion from zero. Right? Any questions? Yeah, so this is kind of the approach to raise a fund. What we are going to do, we are pre-selling 300 billion venture tokens in the next 5 months, and we're probably not going to sell it all. Our goal is to sell 10 million initially, and once we hit 10 million, we can start investing in other companies. This is our soft cap. This way we can start spending that money to invest in other companies and raise more funds. Our personal goal is to raise 100 million in BTC, Ethereum, and dollars. So because we believe that 100 million will allow us to build this ecosystem that will be worth 3 billion fairly quickly. And this phase is 5%, it's $30 million worth of tokens. This phase, 30% is 455 million worth of tokens, and then the rest will be sold to the public, and the initial sale will finish on October 1st, but it will continue until we get tired at the market rate. Okay? So you essentially can get discounted tokens. Why you should buy these tokens? It's not because of investment. It's because this token is asset-backed, and we have a model that proves that the initial token, average token price will be 0.3 cents, not 1 cent, because we discount. And it will increase to 32 cents with our investment and reinvestment of money within the next 10 years. Second, those that have venture token, they get discounted access to lots of great deals. So you get our token for 80% discount, and then you get another 80% discount because we are retail buyer. We bought tokens in masses, and we pass it to you. So you get twice discount, 80%. So essentially you pay 4% on a token of the real value if you use venture tokens to buy these tokens. So this is the discounts. Another thing that we will launch on our marketplace is that we will allow any VC, any angel to come to our marketplace, list their equity, and sell part of that equity through a smart contract to the crowd. And you can get liquidity anytime. If you have great asset that will appreciate, Venture Network will buy that allocation from you. We will never pass that allocation to the end user. they will get allocation in the smart contract. And the smart contract will guarantee them that they will receive distribution of proceeds when there is an exit.